Trading Market Technicals morning call video for Wednesday, May the 1st. Markets up yet again. Dow up 21, S&P up almost 4, Nasdaq up 20, gold up 4 on that oversold bounce, which continues, and the dollar really got slammed yesterday, down 44 cents, kind of fueling the precious metals and commodity sector higher. So now the markets have been up 8 out of 9 days in a row, straight up virtually, grinding higher. Seems like the pattern has been buying the morning session and just kind of flattening out pretty much the rest of the day, being a non-event actually. So it's been very quiet. Other than a few good days that we had some volatility, volatility is now non-existent. We haven't had much of anything actually in the last couple of days, and actually pretty much most of the year so far, with the markets continuing to grind higher, showing no signs of a pullback, and rightfully so. There's no event risks out there, and good news is actually bad news. A lot of market participants are saying, hey, if the economy is chugging along ever so slightly and economic data comes in poorly, Fed's going to continue to accommodate. And $84 billion asset buyback purchases per month, there's no reason to put your money anywhere else but the stock market, and that's what's actually happened. And the market is fueled by free money. Eventually, that's going to change, and it's probably going to. And if the market doesn't correct anytime soon, the one exit, so to speak, if you will, the door, being that there's one door out there and there's everybody one-sided. Look out below, and that's the scary part. The markets continue to grind higher with absolutely no fear in this market. All right, so what do we have? So let's talk about real quickly. Overnight, China manufacturing unexpectedly slipped, and I've been saying for months now that I believe that China will be the canary in the coal mine when people start really thinking and saying, hey, wait a minute, China is slowing down. They're definitely a buyer of our goods, and that's not going to be pretty eventually. Now, something like that, you're not going to trade off of. You're going to really wait until everybody else starts to catch on. So I don't think that's going to be an immediate event risk for the markets in general. Let's talk about the event risk coming to play here between today, tomorrow, and Friday. Now, we do have Fed rate decision today at 2 o'clock, and that's going to be pretty much the big risk today, the event risk, so to speak, to see what's going to happen. I obviously don't think that that the Fed is going to do anything to change their English and their wording to say something that's going to frighten the markets. And I think the ultra accommodation is going to be continued and expected, and the markets will probably grind higher from here as well. I also do think that the markets will continue to push higher. Today is the first day of the month. We have mutual fund inflows coming in, and that's going to be probably lifting stocks higher as well. So we do have some announcements. Some economic announcements are coming out today. We have ADP, PMI, and ISM manufacturing, as well as the FOMC minutes at 2 o'clock. So we have a chock full of economic data coming out. We'll see what happens with the markets, but the markets are in this huge euphoria. So please be aware. If you're holding stocks and positions in the market here, to be very careful, because things could change on a dime. Right now, I don't see anything. I really don't see anything, at least for today, with the Fed announcement today. Now, tomorrow we have the ECB rate decision, so that's going to be interesting. And we're going to see. I believe they're expecting a 25 bip rate cut, so that's going to be interesting to see what happens with that. And then, of course, we have Friday's non-farm payroll numbers, which really, believe it or not, they last month didn't come in so great, but a lot of the traders and investors just really shrugged it right off and continue to buy the market. So it has been a non-event, actually. So we'll see. We'll keep an eye on one step at a time, and then we'll kind of reevaluate it. And if you're day trading, obviously it's a little bit, you're not really going to be worried about too much, but you want to really know what's going on with the big picture. And that's what I try to provide in the morning call video, just to try to give everybody an edge here on what to expect and what to kind of look out for. Things do change, obviously, but we want to be on our toes, and we want to know what is happening in the markets internally. Okay. Let's go right to the charts, and you can see here on the McClellan Oscillator, we are not yet overbought, so that means we can run higher. And right now I'm thinking if we take out 1600, I think we're going to probably hit 1610ish, 1615, and then 1625 would probably be the next bet. And again, we are on uncharted territory, so I picked those numbers, basically round lot numbers, 15, 16, 15, 16 and a quarter, somewhere in that area. I do believe sellers will probably end up stepping in. Right now, there are absolutely no sellers are around at all. There is nothing out there. Nobody wants to sell the market. Nobody wants to get caught. And what's happening is, for those who are looking to short the market, which I say stay away, right? We don't want to be just because the market's up to short the market. That's it's nonsense. That's not trading. So just because the market is up at these overboard levels, overboard is not a sell signal. So you have to keep that in mind. All right, so we have on NYMO, telling us that there's plenty of room to run. Yes, we are overbought in our indicators right now. Momentum is waning. However, price is king, and price is what pays the trader. So please be aware of that. Let's make sure that we don't just go out and I'm gonna buy some puts or buy some SDS and short the market because it's at these levels. I don't think so. We want to look to get the meat of the move. Right now, there's no signs of a tradable top in place, at least not today, and it's going to take some time to markets need to chop around. At one point, it looked like there was, but now we're starting to take out a lot of these key areas, which I'm going to show you in the charts. So it's something that really you need to let's take a step back and reevaluate. Okay, so we do have some red flags, though, right? We have tons of red flags out there, but the markets are totally ignoring it. At one point, when you had these red flags, you could really start positioning short, small, anticipation of everybody else starting to catch on and the markets roll over, and or vice versa, and that's not happening. So you can't do that anymore. You have to see how patterns start to form and take shape, and that's not happening anymore. So we have copper that's been selling off since February, and the markets don't care, right? So we have our stocks above the 50-day moving average are making lower lows and lower highs, right? And what's moving? The indexes are moving more than stocks. Markets don't care. Okay, we have the S&P stocks above the 200-day moving average, which is a big number. Stocks are starting to make lower lows and lower highs. Markets don't care. So that being said, if that's the case, I'm not looking to go short the market. If the markets are sensitive to these indicators, then I'm going to look to short the market, position myself for that turn. Right now, the markets do not care about anything other than buy the market up. And case in point, look at the VIX. The VIX is non-existent. There is no VIX, basically. We are at the lows. We continue to be hovering around these lows. And that is telling me that there is no fear in the market, and the markets will buy the dip in every stretch. So every time the markets will roll over, they will be buying the dips until they get burnt. And that's not going to happen. There is absolutely no catalyst for the markets to roll over right now, unless you get to these extreme points where the markets are just senseless. It's silly not to short the market. Bullish percent, SPX, again, lower high, lower high, lower high, lower high, higher low, higher low, higher low, higher low. Markets do not care about these indicators at the moment. So just be aware that we don't go out and short the market because indicators are rolling over. We want price to break key support levels and start making lower lows as well as the indicators in order for us to position ourselves for that turn. Right now, again, guys, markets don't care, and neither do we. We look for price. Okay, now just going to go through these. I put together the weekly charts. I wanted to show us because we're midweek right now, just to kind of show you where we are. As you can see here, these are all-time highs. We broke through them, and now we are outside of this purple line, which is was the all-time high. Now we are at uncharted territory, and that's the monthly chart. Weekly chart, wanted to show you we have an outside week reversal. As of right now, it's only been 2 days. We have 3 more trading days left. Just keep that in mind. But right now, if things stand, we are going to be outside of this cluster, this little congestion area of the last 4 weeks. That's going to put us in a bullish state, guys. So let's just keep that in mind as well. Okay, now SPY daily. Now I mentioned that we had a formation forming a possible M top, right? Right side, left side. Here's the M, and we had that lower high. Let me just put that away. Right up in here, and that formed a little M top, and usually M tops make that lower high. Now we have a double top, right? So I'm going to get rid of this, and I'm going to get rid of this. So now we have a double top forming in the spiders. So let's see if this double top holds and markets start to sell off. The area of really what we want to look at is going to be two areas, which would be this lower trend line, this lower uptrend line in this channel, and then of course this horizontal support, which would come into 153.75 again, which we all know that's going to be the real key driver of this sell-off when it does happen, if it does happen at the moment. Okay, so look at our volume, really kind of light here. As you can see here, volume is actually tapering off. We are now into overbought territory again in our stochastics. MACDs really didn't move too much on this move, but as you can see here, we are kind of elevated. I mean, I would not be looking to be getting into longs at these levels, and if the market does break out, I would suspect the market to fail. So again, we could still break out to 16.15, 16 and a quarter, and then fail. So just keep that in mind. Here is that head and shoulders that we saw on the 60-minute. Left shoulder, head, right shoulder. Big neckline here at 153.75. Our target would be right here at 147.53 if that were to trigger, right? Right now we have a head test, and if we do break out of this, this pattern will be negated, and then we're off to the races again. So again, a bullish formation because we have not broken this trend line yet. Here is the 30-minute chart of the SPY. Just want to show you that energy is building again. So we're either going to break to the upside or break to the downside. This does not tell you direction, but just telling that energy is building. So again, a word of caution, just be on your toes. And here's the 30-minute chart. Same thing, guys. We just want to show you the retracement. We retraced from here to here 100%. We took it all back, and then we took it all back again. And we're at these levels of 159.65, 159.70 at resistance. So let's see if this market can either break out and or start to roll back over again. And we'll see. And there is some event risk today, right? We have today, tomorrow, ECB, and again, non-farm payrolls. I think if they all skate and we all get through with that with no real hiccup, I think the market's just going to move higher again. And here is the IWMs. Again, the IWMs have been lagging, which is one of our leaders, but they have been lagging. So again, just something to take note of. Nothing to be too crazy about, but look at volume really tapered off here. So Russell, this is something that you don't want to see. Again, another red flag. Markets have been literally just ignoring the red flags, but again, red flag here, higher low, lower low, lower low, lower high. So we are in this channel, but again, the Russell can easily explode to the upside. Transports, our leader, this is our key leader here, and again, ignoring the fact that we are making lower highs. We are hugging this trend line, this long-term trend line. We're still behind it. We need to get back above it and start to break out. Now, if the Russell and Transport start to break out here, guys, like Tech has been doing, and I'll show that to you in a moment, that's going to really fuel this market to go higher. And again, nothing is going to stop it until there's some sort of an event risk. And here's the diamonds again, lagging, a little lagging here, but again, almost I would just call this a double top. So we'll see what happens in the next coming days. It's going to be interesting. Here's the XLF, kind of meandering up at the top of the upper end of the range. When price is holding above here, that's also very bullish as well. We did get a little bit more volume yesterday than we did the previous day. One thing that really is not looking so great is Goldman Sachs. I don't have a chart up for it, but Goldman, if Goldman starts to sell off, so goes the market. That's what they keep saying, and I really don't believe that as well. You need a bunch of things to really have the market sell off, not just one stock. But again, Goldman acting a little weaker as one of the bigger banks. Okay, Apple. Apple here finally woke up. We just caught that 200-week moving average by probably about 7-8 points, and we are now back above key areas of support, which was resistance of 420, and now the 440 is going to come into play here, and I'll show that to you in the daily chart. Again, we haven't finished the week off yet, but Apple is a little bit extended on the daily chart, as you can see here. We had that head and shoulders formation on the lower end of this area. Target was 360-ish. We are still valid. This head and shoulders pattern is still valid. It did break. We back tested it in a bear flag, as you can see here in this drawing, but we broke out of it. So now we broke down below this key downtrend line, which is very bullish. Apple here at 440 broke this other key area, which is also very bullish. So Apple could have maybe bottomed here, guys. Okay, but again, too early to tell. We are extended here in price. So if Apple can backtest this 420-ish area and hold and then really start getting momentum, we could really be on our way. But I don't think that's going to happen anytime soon. I think Apple's still a day trading stock, and I'll tell you why. Because Apple is not coming out with any new products or any announcements on any product line until the end of August, September, going into the fourth quarter. If that happens, I usually tech dies in the summer as well as the rest of the market. So I think Apple will, if Apple can hold here and just bounce around for a couple more months in, somewhere in the fours, that's going to really, really carve out a nice bottom here, and Apple should explode going into the fourth quarter. Now, I think, and again, just my opinion, that Apple may dip below 4 one more time, and where that 360 is, if it's 360, 370, 380, I'd start to look to accumulate Apple going into the fourth quarter. That's just my plan. That's what I'm going to look to do in the coming months. Okay, and then again, we had the Qs. I had mentioned. Tech looked great the last week or two, and I do like tech. I just didn't want to have tech kind of break out at this time. I wanted the market to sell off with tech and then look to buy technology as one of our main sectors to accumulate. But anyway, tech, we broke out on a weekly chart here. Again, it's only been 2 days, but right now, if it was the end of the week, we'd have an outside week reversal to the upside, very bullish. Okay, and then again, guys, here we had a double top here. Let me just bring me here. We had that lower high right here in that doji. I'm going to remove that, right, because now that's not the case anymore. And we broke out of our double top. This is the one sector that finally broke out, and why? With the help of Apple. Apple helped breaking out, but also we had Intel break out. We have Cisco breaking out. We have Akamai, Nvidia. A lot of these tech stocks started breaking out here. This is a very, very good sign, and why the markets are ignoring all of these red flags, and the markets will continue to grind higher. Okay, guys, don't fight the tape. It's if you're looking for a short relative weakness to the market, but if you're looking to do something, I'd be looking to buy pullbacks until this market tells us not to anymore. Okay, remember, heads up today, FOMC today at 2:15, and then we have ECB rate decision, and then of course non-farm payrolls on Friday. Have a great day. We'll speak to you tomorrow. Take care.